Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgen Lee, and I'd like to share with you a bit about what the MACD on a monthly basis is currently printing. The moving average converging divergence really is three sets of indicators in one, so to speak. You have the 12-month moving average shown in the blue, which is called the fast moving average. It moves faster, turns faster, in other words, than the red, because the red is the slow moving average, which is composed of 26 months in price average. So when you see a cross, it's a buy to the upside. When you see a cross to the downside, it's a sell signal, so to speak. Now the histogram shows a similar kind of buy, sell, but really using the same moving average data, but formula-wise outputting a different visual perspective. And it moves in a zero line. Above it is an uptrend, below it, so to speak, is a downtrend. So a few things here. The fast moving average, when it converges with the red, the slow moving average, to the upside, it's a buy signal. Then it'll diverge. Both will diverge away. That is what they mean by converging and divergence. So when they converge here, in this case, it was a sell signal to the downside. Then they diverged. And then they converge again to give a buy signal. And then they diverged. And then they are converging again. And just recently printed a downward piercing of the fast blue moving average of the slow red moving average. Histogram has also printed a negative bar below the zero, and it's currently sitting at -3 or -5 or so, -16 maybe. Having said that, usually when the monthly MACD crosses to the bearish side, as what we are currently looking at, this usually means that price will remain in a bearish mode for several months to come. It is very unusual for such long time based monthly moving averages to become erratic and go cross up to the down, cross to the upside, down again, down, and so on. That kind of erratic crossing of buy and sell signals of moving averages are reserved for short-term moving averages. For example, hourly to 4-hourly or even daily can be very erratic. But when you have very smooth moving averages, like the 12-month and the 26-month converging and diverging, when we get a sell signal, it's going to remain like that likely for quite a while. That speaks volumes to what could be in store potentially on a probable perspective for the price action of Bitcoin. That does not mean the price of Bitcoin cannot rally to 8.1K, but it'll likely, what this is saying is it'll likely succumb again to the downtrend, because a downtrend from a monthly perspective has almost basically just been triggered and confirmed. I hope you find this to be helpful. Tons more on hedging.com. We have the investor class indicator currently working for us right now. I would invite you to come and check us out and join our community. Have a good day.